Welcome to ForexTV.com. Today's Tuesday, July 22nd. I'm Remy Hookie with your New York Forex Market Buzz. In afternoon trade, the U.S. dollar is higher against the euro, yen, as well as pound. And now we'll take a quick look at the latest headlines from the CEP News Desk. Hawkish comments from Philadelphia Fed President Charles Plosser and an ongoing campaign to pass GSE legislation from U.S. Treasury Secretary Henry Paulson highlighted the economic events of the day. Meanwhile, crude oil continued its downtrend, selling off as much as $5 on the NYMEX. There are concerns that Tropical Storm Dolly could be upgraded to hurricane status. Dolly is unlikely to hit major oil and gas facilities in the Gulf of Mexico, but power outages and flooding at refineries near Corpus Christi are expected. And speaking at the New York Public Library, U.S. Treasury Secretary Paulson said Fannie Mae and Freddie Mac are vital to the U.S. financial system, and that he remains confident Congress will pass GSE legislation sometime this week. Meanwhile, Philly Fed President Plosser said that inflation in the U.S. is, quote, too high and inconsistent with the goals of the Fed Reserve. Plosser, a well-known inflation hawk, said monetary policy is too loose and the Fed will likely have to hike rates before an economic turnaround has taken place. Joining me this afternoon is Dustin Reid, Senior Currency Strategist at ABN Amro. Good afternoon, Dustin.
Hey, good afternoon.
Thanks for joining me today. Well, the U.S. dollar is continuing to gain on the heels of the sharp decline in crude oil. Also, Paulson and Plosser's comments have supported the U.S. currency, but we should keep in mind that earnings from the financial sector have come in weaker than expected. But Dustin, let's start off with euro dollar. Now, looking at the 60-minute chart of the pair, we see how sharply the euro has come off since 8 a.m. Eastern Time, from above the 159 level to below the 158 level. So in the next 24 hours, what's your forecast for euro dollar?
I think euro dollar can have a bit of a bounce here. I think we're likely to get a bit of consolidation. That's typically what happens in short-term FX markets. Once you have a quick move in one direction, there's usually a bit of a consolidation. I think the market will take a look at the comments from Plosser this morning, and recognize that there are definitely a few people that are on the governing council that look to be moving towards the possibility of a hike sometime soon in the FOMC. I think the bulk of the governors are looking to not necessarily hike rates anytime soon. So I think a lot of the move today has been predicated on the back of that, and we may see some of those positions unwound.
Okay, Dustin, now while we're still looking at the euro, let's also take a look at the UK currency against the US dollar and euro. Well, given the dollar strength we're seeing today, cable is off from the $2 handle, and the 60-minute chart for this pair also sees pound off sharply in the lower 199 range. Now, euro cable has been heading lower since this morning, but given that we will be seeing the BOE's MPC minutes from the latest meeting tomorrow, if you could give us your short-term outlook for cable.
Again, I think we'll see a little bit of a consolidation there. I think the pair probably wants to trade right around the 2 handle for a while. I think we may see the pair move back up towards 2, maybe just above. Euro and sterling themselves have a very good correlation over time. And I think that, with respect to the MPC minutes tomorrow, the Bank of England minutes tomorrow, I think it'll be very interesting. I think you'll see a very divided Bank of England committee, which may make for more medium-term outlook for cable for sterling dollar a little more tricky to call, because I think you're going to have a divided council as well, which is what you're seeing, I think, across all of the major G7 or G8 central banks. But I definitely think that cable is poised to head back above 2, on a weaker dollar scenario going forward.
Now, Dustin, let's shift our focus over to the yen. Dollar-yen has continued to advance after reaching the 107 level, and meanwhile, euro-yen is a pair that hit all-time highs yesterday and remains in a narrow range for the session. But what's your strategy for the Japanese yen in the near term?
Against the dollar, it's really a function of overall risk aversion. We've seen some better than expected bank earnings, 3-4 trading days ago. This morning's earnings were a little more disappointing, but not enough to necessarily get a huge amount of risk aversion back into the market. I think that's why you're seeing dollar yen higher this morning. I'm in general not convinced that we've seen the end of overall risk aversion. I think the market has more to go, further to go, and I think we'll see some more issues within the U.S. financial sector and just generally eroding consumer confidence. And I think that we will see another round lower in dollar yen. Again, I think dollar yen is really much more a reflection of risk aversion and how markets are trading equities over the next 24 hours. So I could see some consolidation in that as well, maybe heading back below 107 towards the 106.60 area.
Okay, Dustin, last but not least, if we could take a quick look at the commodity currencies of the Aussie as well as the Kiwi dollar. Earlier, we did see crude oil futures fall over $5 a barrel, and gold futures have also pulled back, so it's not a surprise that the CRB index is off. But fundamentally for the currencies, in terms of data and events, we have Australian Q2 CPI coming out, as well as the RBNZ rate decision. So for the Aussie as well as the Kiwi, what is your forecast in the upcoming sessions?
Well, I think looking at the Kiwi, first of all, we've got overnight rates the highest in the G10 at 8.25. Likely to not see any move from the RBNZ at its meeting after the North American close tomorrow. Market is looking for no change, and there's very little price under the curve as well. So if they do nothing, probably a minimal reaction. If they do anything right now, it's likely to be a cut if it was a surprise. And that would definitely have a very negative impact on the currency, both in the Aussie-Kiwi cross as well as in the Kiwi dollar. I would look for the Kiwi to depreciate at least 1.5% if the RBNZ surprised and cut rates tomorrow. In terms of Australia, again, very high nominal rates on an overnight basis. Their Q2 CPI report is coming out, as you mentioned. Its CPI and producer prices have really been traded heavily in terms of FX reaction, both in Australia and in New Zealand. So I would expect basically a textbook reaction if we see a significantly higher than expected print in the CPI figures for Australia. I would look for Aussie to rise as rate cut potentials get wound out of the market. Conversely, if those numbers are well off expectations, i.e. below expectations, I'd look for Aussie to come off with expectations of further cuts priced into the RBA curve going forward.
Okay, Dustin, we're all out of time for today's interview. Thank you very much for your analysis and insight into the Forex marketplace.
Thanks very much for having me.
This has been your Forex Market Buzz with Dustin Reid, Senior Currency Strategist at ABN Amro. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.